Hello and welcome back. If this is your first time here, I am Dr. Stock, Doctor of Education, and in this video we're talking everything retail, as I believe that retail sales data that comes out tomorrow at 8:30 a.m. is going to be one of the biggest impacts that we have to the market. And then we have on the heels of that, or maybe even going alongside it, the earnings that we have for several different companies that I want to point out in the retail space that could tell us about the consumer going forward from here. I think they're highly important, and I think that they do make the market a little bit nervous in the near term to hear what they have to say. So I'd like to provide some of that commentary to you. I do want to ask, there's mama bigger, papa bigger, and baby bigger. What I want to know from you is, who's the biggest one? It's baby bigger, because he's just a little bigger. All right, that rock music to follow up all those dad jokes, because you know they are incredible and they are rocking. So let's move on from there. I will be showing you the Moomoo app in this video, and I'll tell you later how you get up to 16 free stocks using my link that's down in the description. Also, forward looking from here, we have NVIDIA earnings coming up after the market closes on August the 23rd. If you want to see my earnings forecast, that is available over at the Patreon. You can click that link that's also down in the description. Sign up and you can check it out. I posted back on July the 25th, and I'm going to put up an update for that, talking about where the price currently sits and where I expect it to go from here. All right, that's enough with that. Let's get into the retail sales. So here is trading economics, and I like to use this for my videos. I have no stake in trading economics, just displays it pretty nicely for us. So here's Monday, August the 14th. Consumer inflation expectations. I think we get those. Well, I know that we get those 11 a.m. I think that we'll see that to be pretty good. It might continue to decline. You might be able to see that right there, that it has been dropping. And I think 3.8 or maybe tails off a little bit. Here's the big thing. Tuesday, 8:30 a.m. retail sales data that we get, and previously it came in at 0.2%. Consensus is actually coming in at 0.4 and 0.3%. So we'll see how that comes in. I do think that we'll get a decent number there. It is lagging though. I would rather be forward looking from this, and I think that's really where the corporate earnings come in. I have a Home Depot, Walmart, Target, and TJX all with their earnings coming up. I think that they're going to be really important to pay attention to this week. I believe that all the retail earnings that I have just mentioned all happen before the market opens on each of their respective days. We'll go through that with the Moomoo mobile app. We'll go and we'll show the earnings calendar that is available through the Moomoo app, and you can see when those happen, and then some of those are even broadcast. The earnings calls are broadcast live for you. So retail sales year over year. When we look at the chart on this one, you can see the decline that we've been on as we look at those year-over-year numbers. And if we go out to a 5-year view, you can see that prior to the pandemic that we've come down pretty much, maybe a little bit softer than we were prior to the pandemic. And if we go out 10 years, you can see a very similar story. If we go out 25 years, this I really want you to pay attention to, because you can see the Great Recession that we had back in 2008 and what it did to retail sales. And that's something that we want to watch out for. Where exactly does this decline finish? And we are, if I go back to the 5-year chart and switch it to columns, we are going up against these 2022 numbers that we saw that were a little bit above trend. So these being a little bit below trend should make sense on a year-over-year basis. So I think that we have a lot of normalization there. Now, I also do want to mention that I saw Stockmo's video that he put out recently talking about CPI inflation and shelter's impact that it has to it. And he gave a lot of commentary. So if you go over to Stockmo's channel, you can check that out. I don't want to put words in his mouth there, but he believes a lot the same that I do, that is inflation is stamped out, and the Fed, honestly, I think the Fed's keeping a stiff upper lip on this whole thing, and that they don't want to show their cards early, because they don't want to give that chance for inflation to go back up. So we'll see how that goes. All right, so retail sales. We know for retail sales data that we expect it to come in moderately good, or at least nothing really all that surprising. However, that forward guidance that goes on top of it. So if for some reason retail comes in soft, and then the guidance for it coming out from Home Depot, Walmart, TJX, Target, if that also comes in soft for that forward guidance for the next quarter or for the rest of 2023, or if they sound really uncertain about what to expect coming up, if they sound nervous in those earnings calls, if they have big misses, which we might not necessarily expect from any one of those companies for this quarter. And like I said, we'll look at the charts on those things, but that can be very telling in a forward-looking sense, and the market will reflect that. We'll see that. We'll see it in the S&P. We'll see it in the NASDAQ. We possibly could even see it showing up in the Dow Jones as well, based on what they say. So I think it is a big week for those earnings. All right, so let's switch over to the Moomoo app and we'll start looking at the different companies that I've mentioned. We'll kick things off with Walmart is what we're looking at right now. And when you look at Walmart's chart, it looks like it's already expected. To me, the price already looks baked in of what we're going to get for uncertainty going forward with some weakening in retail. So for this one, for Walmart, this rising wedge that we have going, I think that it is possible we get a bearish reversal off of that. I still think that we can move 3% in either direction on their earnings. And like I said, I will get to those earnings dates when we switch over to the Moomoo app on mobile, because I want to show you that calendar that's on there, just quick, easy, clean, and just wonderful looks to see what the analysts are expecting and everything. So for Walmart, I am expecting 3% move in either direction. If I had to put a bias to this, I would say that we could possibly see it drop down from here 3%. So the next one after that is Target. And this one's a little bit crazy. So Target has had quite a time of it recently. It hasn't necessarily been all sunshine and rainbows on their charts. They are reverted all the way back to 2020 levels. So August of 2020, they're back there. And this is what I was talking about when it came to Disney. Disney, I said with their earnings that the contrarian perspective started to make sense. So for Target, I think it is possible we see some weakness. I think for Target, we get 7% move in either direction. So that's a pretty big move that we have. And volatility is really low. The historic volatility is really low, although we are coming up on earnings. So that extra demand that we could have on different options could make it a little bit rough, monetarily speaking, to squeak out a sort of profit on this, a straddle on this one. However, it is something worth looking into, I think, for Target. So for this one, I think it's been so beaten down over time and the sentiment is so negative on Target that it starts to make sense that we start to kick back up the other way. So we'll see if we do break down from its current price. Let me put the chart back up there. The chart right now, as of the recording this video, we're just under $130 per share. And I think that we could drop down in the near term if we do drop down to about 115. And for me, my instinct looking at the chart here is to go short on this and say that it's going to drop down for us. And I don't know that that'll happen, but I think like 118, 119 would be that price where it would fall. So we got about $9 in either directions. That means that we could go up possibly to about $138 per share should the contrarian perspective hit for us for Target. Let's move on from there to TJX. TJX is an even more exaggerated rising wedge than what we had in Walmart. So for economic uncertainty and the low prices that you get from, honestly, I didn't even know about what was inside TJ Maxx and Home Goods and all that until I met my wife. And then she goes, and Marshall's, I think, is also in there. And she said, "You've never been into one of those?" I was like, I think for like 5 minutes, but nothing really appealed to me. I didn't really look around. And then I actually took to, for a while, when I would go in with her, I would go and I would look and I would actually count how many guys there were in the store. And that was usually a pretty easy job to do. Even in a large area, I could usually count on one, maybe two hands how many guys were actually in Marshall's or TJ Maxx or Home Goods. It was a much more difficult task to count how many women were there. And for the men who were there, it was even rarer to find the man that was shopping by himself. So maybe if they can find some way to, and maybe they already have it in just a different part that I'm unfamiliar with, maybe finding some way to more appeal to those male customers to actually bring them into the stores would be very good for them moving forward. I don't know. But this rising wedge pattern that we have here, I think for TJX, we've got a 5% move in either direction. So that from here, between $4 and $5 from where it sits right now, that we could give up that price. So right now it's about like $86 or $87, and I think that we could soften from there to about $81 to $82. And if we surprise to the upside on earnings, we have good guidance going forward, then I think that we can push up to $91 or $92. So that's what I have for TJX. And then the last one on my list today is Home Depot. And Home Depot's, I mean, man, it's pushing right on. Looking at this from a technical perspective, yes, we are right up against resistance, and we do have a bit of a bull flag taking place right here. We're currently sitting at about $330, and it doesn't have that same look to it that Walmart or TJX did. This is one that shouldn't be able to break above. I mean, we could possibly see this thing go up to about $342 a share off earnings if we go to the upside on Home Depot. And for me, I think that Home Depot doesn't give great guidance, but I think the market might even look beyond that guidance to what's around the corner on this. So if we have a soft housing market, now mind you, I read an article earlier about foot traffic having increased in stores like Home Depot. So it is possible that we get good news for their earnings. I expect revenue beat. I expect that we have an EPS beat for Home Depot. And I think that might initially put us in green in the pre-market hours when they report, and then we'll see with their earnings call itself what their guidance brings to us, because I think that's even more make or break than what we get with their revenue and their earnings. So they could be positive on both of them and still miss it overall. So from a technical perspective, I like to look at this in a bullish manner, that possibly up to that $342 per share. So I have a Home Depot 3-4% move to the upside or to the downside. We could also break down this way down to about 318 or so, should we end up falling short on that, especially for guidance. So we'll see. Certainly by the time we get to the 50-day, I think would be the ultimate limit that we would have to the downside on a Home Depot. And if we zoom out to look at the chart over time, these little movements with price and these little fluctuations that we have in economic activity, they're not make or break. Even when we go all the way back to the pandemic, and the way that we recovered from that was absolutely beautiful. Economic stimulus certainly had something to do with that, and the push in the housing market and people moving as much as they had really helped out Home Depot. And you can see from there that the softening started to happen, and then we had a pretty big double bottom before rising up. And then, well, for Home Depot, I think wages started to be the thing that hit them. But I think that that's water under the bridge at this point in time, that wage pressures are slowing down and are going to allow Home Depot to more stabilize from where they're at. So in the short term for this, I think for earnings, if I gave a call on this, I would say Home Depot pulling back about 3 to 4%. However, earnings aside from that, it is a nice looking chart. All right, we're going to switch over to the Moomoo app, and I wanted to take this moment to tell you how you can get up to 16 free stocks using my link that's down in the description. Not only are you getting access to a wonderful trading platform, but you also can get up to, like I said, those 16 free stocks. Here's how you do it. $100 deposit, 5 free stocks, $50 cash reward. That $50 cash reward is available at every tier. $1,000 and $5,000 gets you 15 free stocks. The $5,000 tier gets you also a free share of Tesla or Google. So check that offer out before it expires. It does not last forever. All right, let's pop out of there and let's take you over to the Moomoo app itself. So this is the Moomoo app on mobile. I got my iPhone out here. And if you go to the Markets tab, you get this menu at the top, overview, and you tap on the one that says US. And here's what the top of it looks like. And you can see the NASDAQ and the S&P are turning green for us. And if you scroll down to the earnings calendar and then tap on the earnings calendar tab, this pops open, and you can see that on Tuesday the 15th, before the market opens, we get Home Depot. And then on Wednesday the 16th, we have TJX. And if you hit show all 50 and scroll down a little bit, there's Target as well. And you can see the calendar that I have in orange. The reason that it's orange is because I've added it to my calendar. Just tap, it's added. And if you tap on the company itself, go to company, and then you can scroll down and it tells you about its revenue year over year, also its net income, and you can see for Target, not great, and that's why it's been selling off the way that it has. And then it tells you about where its revenue comes from and what % of its revenue. It tells you about EPS, it tells you about return on equity, it has its income statement, balance sheet, cash flows, like you name it, it's all within the mobile app that we have. So the last one that's left after that is Walmart, and that is on the pre-market on the 17th. So Home Depot the 15th, and then we have TJX and Target on the 16th, and then Walmart on the 17th. And then just as a little bit of a bonus, if we scroll down a little bit there, Tuesday pre-market of next week, the 22nd, is when Lowe's reports for us, and that could move in sympathy with whatever we get from Home Depot and certainly with Walmart as well. So if you like what you saw with the Moomoo app and would like access yourself, plus those free shares, use that link down in the description. Also, if you like my commentary and like to hear more of it, see more of my product and services, such as my watch list of stocks, which I just added a bunch to, my NVIDIA stock price prediction and NVIDIA earnings forecast, which that, by the way, NVIDIA earnings are coming up on August the 23rd after the market closes. I also have that available over at the Patreon, so you can find that link down in the description as well. And if you scroll down until you get to July the 25th, that's where I have that one. There it is for you, Dr. Stocks, NVIDIA earnings and stock price prediction. And I will be putting out an update video for that prior to their earnings, also to be available on the Patreon. I got a community of investors as well. If you want to check that out in the private Discord, that's also part of the Patreon included with each tier of membership. So thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.